Thank you very much for joining us today, Julian.
Yes,
if we just take a look at what has happened in the US and the response to that downgrade from Treasuries, is it symbolic? Is it more symbolic than it is real?
Well, I think really, obviously, if we look at the equity market reaction, there are a large number of really negative factors that have been coming together at the same time, and the rating downgrade was just one of them, and the timing was so unfortunate there. If we look, though, at the bond market in the United States, it's being much more stoical about the action, and as you were saying there, it's not the case that all the rating agencies are going down the same line here. So in that sense, I think we can live with the rating downgrade, the one-notch rating downgrade by S&P. The question really is, as you're also saying, what's really going on out there in the global economy, and is there going to be some new positive confidence shock that can come through at this particular stage that can really bail things out? Because after all, if countries can't really grow, then they're not going to be able to service their debt.
Indeed. Now, talking about growth, we've got the Fed meeting tomorrow night. Do they have much left in their arsenal? There is talk of QE3. Can you see that? Can you see anything else? Where do they go from here?
We've been inclined to the view that tomorrow's FOMC is going to be focused much more on reviewing the situation, really taking stock. You do have the famous Jackson Hole Symposium happening at the end of this month. Of course, the Fed Chairman, Mr. Bernanke, will be speaking at that event. That could be the opportunity for him to lay out the options there for the Fed. So we're currently of the view that the Fed won't pull out any particular new surprises. That said, we are seeing some extreme volatility in financial markets right now, and that does mean, I think, that the Fed is going to have to pay attention to that, which could mean that there is some modification in the Fed's language, which perhaps offers the market a few crumbs of hope here, that the Fed hasn't totally abandoned them, that the Fed is still keeping a very watchful eye on developments in the business cycle and is prepared to inject yet further stimulus, call it QE3 if you like, if that does prove necessary.
Julian, thank you very much indeed
Thank you.
for that.